Hello everyone, this is Naim Azam, Chief Market Analyst at Trade. We are starting a little bit ahead of time. We still have 1 or 2 minutes. I kind of wanted to prolong this session because today is obviously a special day. A lot is happening in terms of a stock market, in terms of a geopolitical tensions, and of course in terms of earnings as well. So this is really your opportunity, folks, to ask me questions in relation to your trading, into any questions that you have about the fundamentals or about the general stock market that perhaps that you have. But one of the things that we kind of really wanted to focus you guys today, or perhaps for all of our traders, is Tesla's earnings, folks. Those earnings are coming after the US stock market close, which in the UK time it will be about 9 p.m. But remember, if Tesla can break that forecast or the street's estimates of what is that going to do with the stock, because obviously the stock is likely to rise massively to the upside, and that means that Tesla will officially become the part of the S&P 500 index. Once Tesla becomes part of S&P 500 index, it will trigger more capital inflow towards Tesla. Why? Because there are certain ETFs, which are known as exchange traded funds, and several other hedge funds. What they do is they have to buy stocks which are part of the S&P 500 index. For example, SPY is a famous spider. It's called a spider ETF for S&P 500 index. So that means that the moment that the stock becomes part of the S&P 500 index, it is likely to see enormous amount of a capital inflow, and a large movement can really occur in the stock market, especially for the Tesla. And remember, any move in Tesla is also somehow, it also happens to bring a lot of positive movement for the Nasdaq index as well, because that is a tech-savvy index, even though Tesla isn't really the partner of the Nasdaq at all. But there is a correlation between that. So the opportunity really is that today, when this US stock market will open, perhaps one can look into that stock, and then if you have a better understanding of, if you have a stomach for that, with the tighter stop losses, you could perhaps what one could perhaps look for an opportunity to get into a price at a suitable level that is really in line with your own risk levels and with your own risk parameters, obviously. So that is something with respect to with risk earnings. I think Tesla is very. I just kind of wanted to give you a little bit of a background what is really happening in the traditional equity market space, because we have seen this massive rally for the coronavirus stock market, right? And that rally started since the Federal Reserve. They came out and then they said, look, we are here to support the market, and we will do whatever it takes to help the businesses over in the United States. And then the Fed lowered the interest rates, and then they started buying corporate bonds for those companies which were under a lot of stress. Now, of course, for those companies, a lot of companies also got a bailout from a Federal Reserve as well, and I'm speaking of like the massive airline sectors, utility sectors as well, and several different sectors, really several different stocks that they got a bailout from the US. And that it was pretty much watching the same film what we've experienced back during the financial crisis. The only difference between that and now is obviously the banks were in a lot more better position as compared to what they were back in 2007. So somehow that stress, the financial stress, can be contained to a larger extent because of the improvement in balance sheets for banks. Because remember, 2007, crisis is not only isn't called a financial crisis for no reason. There was a financial crisis mainly because of the banks, because mainly the banks had a very loose balance sheets, but those balance sheets are much tighter. And of course, these banks are during this particular earnings season, because last week we had massive earnings season for Wall Street giants. Speaking of Goldman Sachs, Citibank, Morgan Stanley, Bank of America, Wells Fargo. So we had a massive, a raft of earnings from these Wall Street banks. And then there's something that again was very common between the banks was that the loan provisions, the amount that they're setting out for those bad debts, that is still on the rise among these Wall Street giants. And that remains a major qualm among investors. However, on the positive side of things, what really also happened in terms of a bank stocks was that some Wall Street giants like these financial banks, they are also anticipating that perhaps the worst is over or the worst is behind for us. But yes, at the same time, they are balancing this statement that the path of a recovery isn't really going to be that smooth as well. There are still a lot of obstacles. And what are those obstacles? Those obstacles are restrainment of what we're seeing, a restrained recovery over in the United States because of the emergence of the second wave. And speaking of the second wave, we know that now Donald Trump is very much on this aspect that he wants Americans to start wearing masks. Of course, if this would have been implemented from day one, like how in the UK we have, because from the 24th you can't go into a public department stores without wearing a mask, the case, then perhaps we could have a very different scenario. Or reopening of the economy, say in certain states where it happened prematurely. Obviously, that didn't really happen. Of course, this is the reason that Texas and Florida, they are continuously in the headlines on every single day. And these are what you call obstacles in terms of a stock market rally, in terms of economic recovery, in terms of what these financial banks are really referring to. So now the questions are coming up. Of course, I'm going to touch on gold because a lot of questions are coming on gold as well. But I kind of wanted to give you the background on the markets. So with respect, I'll take the first question with respect to the Dow Jones index. So the question is basically where do we go with respect to the Dow Jones index? Now, folks, it is very important that I have actually done a video today about Dow Jones. And the video is about this particular factor that, look, we are about to see a major rally, perhaps a major rally for the Dow Jones index. The reason behind that is when you look at the Dow Jones chart on the daily time frame. Again, if you wanted to have a look at the chart, go to our videos, technical analysis video, and then you can refer to that. Or I can always tweet it afterwards as well if you guys want that, so just interact on Twitter. So the daily chart shows that this is the first time since 2019 that the 50-day moving average, and I'm speaking of simple 50-day moving average, is about to cross above the 200-day moving average. Now, the crossover has already happened. And that is a very positive. This is what you call the golden signal in the market when a 50 crosses above the 200-day moving average. So the question was that, okay, what do we think about the Dow Jones going forward? So this particular rally can really continue. The rally can continue because of, number one, the technical signals, because the technical signals really filter out all the noise. Now, speaking of the noise, first of all, we have Congress in Washington talking about the second stimulus package. Now, of course, the deadline for the current one to expire is by the end of this month. Now, the Mitch McConnell, the leader who's really leading this conversation between Republicans and Democrats, he doesn't seem to be too optimistic that we will get another deal by the end of this month. Now, of course, that means retracement in the market. Hence, as you can see behind me, the Dow Jones futures are retrading to the downside. And of course, we are also seeing similar reaction for the European markets as well. But Once we get the green light on this stimulus, the stock market rally is really likely to pump to the upside, and because of this stimulus. And this is the reason that we have seen massive rally for the Dow, for the European indices as well, especially for the DAX index, which, by the way, is about to erase all of its year-to-date losses. Of course, the S&P 500 has already done that a couple of days ago. In fact, yesterday was the day, but the DAX index will be for the first time, it is about to do that. Now, what about Nasdaq? So when we are referring to Nasdaq, look at the current price for the Nasdaq with respect to its 100-day price average. So I'm really referring to the 100-day price. So that movement, so that the 100-day price is really trading over here, 100-day moving average, and the price is trading here. So the distance between the two is really at a level that we have not seen since 2000. Now, let me clarify that. What do I mean? So the current price is nearly 21% above its 100-day moving average. So that really means that some sort of a retracement is coming or a bubble is forming. Right, okay, and then we're going to continue to the next question, which is about gold hit 11-year high, where it will go. Yes, this is a very interesting question. Yes, gold has hit 11-year high, and remember, we have played this beat several times in our analysis and in our videos that it is very likely for gold prices to cross above the 1800 mark, which it did. And then we talked about our next psychological resistance level of 1850, and we talked about that the gold prices are likely to thrash that resistance level as well, which it did yesterday, and then hence we have 11-year high. Now, what I believe is likely is, again, that the gold prices can always go down. There's no surety, because we've seen that happening in 2000 during the financial crisis in 2000, in early 2011 to 2012, when this started to crash once again. Sorry, I think it was 2013 if I'm not wrong, when gold prices really started to crash again. So they can really crash, but given where the momentum is right now, I think it is likely for the gold prices to continue its journey to the upside and perhaps break above the 1900 mark. Because right now, the rally in the gold prices, it isn't about the 1900 psychological level. It is about all-time high. It is about 1921. What can lead the rally? The reason is because the current stock market rally is really dubbed as the worst rally in the history of financial crisis, in the history of the financial, in the financial stock history. So because investors believe that the current stock market rally is purely supported by stimulus and by monetary policy. But again, these rumors or these arguments, they're nothing new. We've seen the similar arguments back in 2009 as well, 2007, when stock market really started to rally, and everyone was saying things are really still enormously dire, and stock market rally is really going to continue its journey to the upside. Nonetheless, because of that, there is some interest in gold, and traders are trying to diversify that. Secondly, the ongoing geotensions between the US and China. And recently there is a headline that US has ordered China to close its embassy in Texas. Again, that is further escalate those tensions. And of course, UK has already taken a very strong stance against China as well, and there are already tensions going on between Australia and China. So all this China story is very, very important. Hence, traders are really trying to go towards that. And another important point, which we probably won't hear it that much, is that a new person who's about to join the Federal Reserve Committee, she is a person who really believes in gold standard. So, what does that mean? Does that mean that, our Federal Reserve is going to start buying more gold in the coming days? And if that happens, then where do we go from there onwards, really? So that is, again, a very, very critical and very, very important point to keep an eye on. Okay. So is Amazon a bubble? Well, look, I think that there was a headline yesterday, a day before yesterday, that the CEO of Amazon, he's increased his wealth by a few billions, not by millions, right? So because there was a nearly 4% or to 5% move in Amazon stock. I think given where the pandemic situation is, given how consumer behavior has changed, given what Amazon is really providing, the one-day delivery, the Amazon Prime, the Amazon movies, the Amazon books, and every Amazon cloud, I think, look, there's no doubt that the price is very expensive. So a better level of entry could be much, much lower with the price trading right now. And again, in my own portfolio, I'm not doing that anyway. I mean, I don't hold Amazon. And by the way, I just wanted to reiterate something, that anything which is discussed in this particular Q&A session cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. It is very, very important that you guys understand that. So, Amazon, I think it is just too expensive right now for us. Will Microsoft will rally after results? When it comes to Microsoft, again, go and read our blog today. Well, the question when it comes to Microsoft is, what are the products that Microsoft is really offering from working from home, right? Because that is where the future is for the technology. It's like Microsoft Team, Microsoft Cloud, and several different products. Investors are really going to dissect and really going to focus on Microsoft's product, which are geared in this particular market, and really going to assess the revenue and how much diversification is really coming from there. Of course, there is a number of computers, increasing number of Microsoft licenses as well. Because of the pandemic, everyone is working from home, so we should see an uptick in Microsoft earning in the coming days, especially today. And then there's a question about, I see the recently Porsche and Ferrari stock. They are also listed on, yes, the Porsche and Ferrari, both of these stocks are listed. Again, this is the luxury market that we are really referring to, and these stocks primarily perform really well when people have ample amounts of capital to go and buy these discretionary products, right? So right now, I think with the furlough payments about to end in the UK, and of course there's still a lot of stimulus help coming over in Europe, and of course in Europe, in the United States as well. So the opposite side is that okay, maybe perhaps that will help to or aid the recovery process, and perhaps we will see an uptake. Perhaps the current retracement in both Ferrari and Porsche could be an opportunity to get into this trade, because the prices are definitely low, because of, again, the people don't have ample amount of capital for these discretionary or for these luxury products really that we are looking for. Okay, so let me read some more. Tesla earnings, we've done that. Can you please how this power struggles up? Okay, so then the question is coming about stocks like Nike, Adidas, Puma. Again, all of these stocks are available on our platform. Again, this boils down to that story of which platform really is geared to serve clients from their home, which has a better online website, which has a better services in relation to getting the product out to the clients. Of course, Nike has done a lot of work, and Adidas in that as well. So, and then these stocks, I think the good days are ahead of them. The normal consumer activity isn't really likely to resume until and unless we get vaccine. And speaking of vaccine, when about vaccine, you may want to keep an eye on major stocks like the Pfizer, Moderna, especially for Pfizer is very, very important. It is leading that coronavirus vaccine race. So let's keep a very, very close eye on those vaccine stocks, the one that I've just mentioned to you guys. So the major stocks are Pfizer, AstraZeneca, Moderna. So these are the three major stocks that you kind of really wanted to keep an eye on. And of course, if I've missed any, so feel free to chat about that now. Okay, when there were only 30. Okay, so look, if someone is asking that, now we have a lot of people, nearly 40 plus people literally attending this, which is really beautiful. But don't worry about it. If you have missed any of this session, or any of the questions, you'll have the opportunity to go back on our YouTube channel and then watch the video and understand that. And if that is not even clear, then come back to your account managers, bug them, ask them. That's why they are there for, or your sales manager, and then ask those questions to them, ask them to direct them to me. Again, my name is Naeem Azam, and I'm the Chief Market Analyst at EverTrade. So ask them, or continue to go onto our website, evertrade.com, where we have a blog where I put a lot of reports on a daily basis, and some special reports. In fact, speaking of a special report, we put a special report on the gold prices yesterday, and today's analysis is a lot more deeper. Nearly 1,300 words of analysis is really up to date. So keep an eye on that. That is very, very important for you guys to have a look at it as well. So I think this is pretty much it for today. And once again, guys, I just wanted to reiterate, anything which is discussed in this particular video cannot be perceived as an advice. Please make sure that you are catering according to your own risk. Thanks ever so much for watching, and it has been a pleasure as always, and I will see you guys next time.